Hello everyone, welcome to Crypto Basics Coach podcast. I'm Marco. I'm here to help people navigate this topic so as to benefit from the opportunity this new technology provides and not get distracted or put off from the nonsense there is out there about crypto. Anything and everything presented and discussed, whether here or in our sessions, is of an educational nature and should never be taken as financial advice. Always do your due diligence and consult professionals before making any final decisions. Hey everyone, hope you're well. Hope you've had a good week and a good weekend. I'm running slightly behind schedule this weekend, had lots on. Hope yours was just as fulfilling as mine. Caught up with some old friends and it just reminds you what good times are all about. Also some interesting things happening in the market from what I've been seeing, whether it's silver price, whether it's the Japanese carry trade, which is what we're going to talk about today, and just some other shenanigans that are going on various networks, exchanges claiming that cooling centers at their data center is causing the outages and stuff. I'm actually going to do a short 1 or 2 minute video in TikTok and Facebook, Instagram. If you didn't know, you can find me there as well. I put together 1 minute videos, 2 minute videos, just on a few select topics. But I'm going to cover the how a data center is built and how that's just a bunch of hogwash. That's what caused the Chicago Mercantile Exchange to freeze up when, of course, coincidentally, silver prices were going through the roof. I mean, these people must really think we're morons, almost to the point where it's really, really annoying and insulting to our intelligence. But anyway, today, we're not talking about that. Today, we're here to talk about Japanese carry trade. So what is a Japanese carry trade? No, it's not a brand of bag. That's not what it's about at all. Let me give you some background. About 20 years ago, when the Japanese market basically blew up financially, caused a global financial crisis, and we won't go into details as to what caused it, but essentially their economy blew up. And as part of fixing all of that, some say they decided, I would probably prefer to describe it that they were encouraged, we won't say by who, to perhaps keep their interest rates at zero. And so essentially, as you can imagine around the world, when you go and borrow money, there's usually an interest rate. Okay, it can be as low as 2%, could be as high as 30%, depending on the terms of the loan. But in this case, essentially the Japanese government decided that they would have zero interest rates. Now, for individuals, unfortunately, who live outside of Japan, I did look into it at the time, and it was almost impossible to go and get a free home loan, effectively. And yes, there were risks with exchange rates, but from a Japanese perspective, you weren't paying any interest rate. So, of course, what some smarty pants people did around the world in these, financial high wealth companies, I won't name them by name, but they went, well, fantastic. So what you're saying is I can actually get a loan from Japan at 0%. I then exchange it for a different currency, or perhaps use that to go and buy US treasuries or other instruments that are producing 4%, 5%, even 3%. At the end of the day, the money is for free. And if you can make any percent on that money, then you're in front. And for the last 20 years, they say somewhere around $20 trillion was borrowed from the Japanese and put into international markets, earning interest for the wealthy, for the elite, for big financial firms, for banks, for all the people that normally make a lot of money on these situations. Not us, the normal folk. And so for 20 years, that's been running. And they've been making lots of money. Now, in August of last year was the first time that Japan raised the interest rates. And I don't remember, but it caused almost like a 15-20% drop in the stock markets and in the financial markets. And if you look into it, apparently it was a huge increase in interest rates. It went from 0 to 0.25. Yes, you heard correctly. 0.25%. 0.25% of raising the interest rates caused a 15 to 20% market fall across most markets. Why? Well, in some ways you could look at it saying, well, they did raise interest rates 25%, which is true. but it was only a quarter of a percent that they raised it. However, what it did was it sent a message to the market that, hey, this trade you guys have all been enjoying where you borrowed at 0%, you're making percentages elsewhere, this is going to come home to roost now. Japan's economy needs to raise its interest rates, and now just in the last 4 weeks, clear intentions have been made that it is going to raise interest rates, and when it does, this carry trade is essentially going to have to be unwound, because people that were borrowing at 0 and let's say making 4%, well, the margins are going to now be squeezed between the interest rates being raised in Japan and, of course, them still making 4% wherever they are. So people are going to, and by unwinding the trade, what it means is that people are going to have to start selling assets to essentially cover their positions or potentially just get out of their positions altogether. Now, such a major influx of treasuries and other things all of a sudden flooding the markets where they're being sold so that people can cover their financial obligations back to Japan, this is what is expected to cause quite a major disruption. Okay, and in my sessions, I do cover with people the things that they've put in place recently to perhaps not make this as a massive impact as it did last year. However, the markets are still going to be affected by it. There's no two ways about it. You can't unwind $20 trillion worth of investing that you've invested in certain tools and in certain instruments, and you're going to now start flooding the market by selling them because you need to get out to cover your debt over in the Japanese market. Okay, so there's going to be some impact. But if you hear it on the radio or hear it on TV or through friends or on social media, and you keep hearing this term Japanese carry trade, this is what's being, this is occurring because of the Japanese carry trade. Well, now you've got a bit of an idea of what is it. It is basically a financial position that people have been taking advantage of for the last 20 years, but because interest rates in Japan are now going to start going up, that trade is no longer financially viable or less financially viable, and so the big firms are going to start dumping the instruments they bought so as to cover their positions. Okay, and whenever you have such a major turnaround of selling and buying, of course that's going to create turmoil in the markets. Now, there are one or two technologies in crypto that may very well benefit from this situation, and it's to do with liquidity. It's to do with the liquidity drying up when all these trades are occurring, and something perhaps may have to backfill these trades and deal with the liquidity that's required. If you're in the know, you'll know what those technologies are. If you don't, then you should be booking sessions with me to find out about this sort of stuff, guys. And that way you can potentially position yourself to take advantage of it. But, money doesn't just disappear. One of the golden rules of finance, okay? Wealth does not disappear. When you see on TV that, $300 billion has been wiped off the stock market, no, guys, that hasn't evaporated. That hasn't disappeared. It has transferred from someone's hand who's lost it to someone else's hands who receive it, okay? Don't think that these market turnarounds means that wealth just evaporates. It always transfers. So if you know which cryptocurrencies to be involved in, you may very well be able to take advantage of this situation where through global economics, the Japanese carry trade is going to be unwound. Okay, so you're either in position to take advantage of it, or you're a spectator, or like the majority of the population, you don't even know what's going on. Okay, you're too busy earning $1, too busy paying your bills, paying your mortgage, that you have no idea this stuff is going on in the background. Okay, if you want to get out of that situation, then you need to educate and you need to become aware of these situations. So I hope I've covered that off to some extent, so you've got a rough idea of what it is, what it's going to cause, and where some of the opportunity lies in taking advantage. Stay tuned for more. This week, you can have a week off, no homework. Hope you did last week's homework and got something out of it. But I look forward to talking to you in 7 days' time. You guys all take care. Cheers. If you found this information helpful and are interested in a more hand-holding approach while navigating this complex industry, please visit cryptobasicscoach.com, that's basics with an S, and book a session. The first 30-minute session is free, and we can get to know each other, talk about what your aims are, what you're looking to do, and how I might be able to possibly help. I've helped people get started, set up exchange accounts, wallets, DeFi platforms, and general knowledge. Look forward to speaking with you. Cheers.